Ironically, digital money is both liberating and controlling. It allows instant transactions across the globe. You can pay a friend in another country without visiting a bank. You can invest in assets on the other side of the planet. But it also centralizes control in invisible ways. Central banks, commercial banks, clearinghouses, they determine who gets access, at what cost, and under what rules. Algorithms now make decisions in milliseconds, adjusting credit, liquidity, and interest to influence behavior on a massive scale. And here's the kicker. Almost none of this is transparent. The mechanics are hidden in code, regulations, and balance sheets that the public rarely reads. Let's zoom in on a concrete example: interest on digital deposits. You leave $10,000 in a bank. The bank lends most of it. You earn 0.1% interest. The borrower pays 5%. Where does the difference go? Profit, of course, but also leverage. That small spread fuels more lending, more derivatives, more speculative bets. Your $10,000 is not just a deposit. It's a node in a system magnifying risk and reward far beyond your awareness. Multiply that across millions of accounts, across trillions of dollars. The implications are staggering. And yet, mainstream narratives miss this. We hear about fintech apps, crypto hype, digital wallets, and NFTs as if they're isolated innovations. But they're part of a single overarching trend. Money is leaving the physical world and entering the digital bloodstream. With it comes efficiency, yes, but also invisibility, leverage, and vulnerability. In other words, we're entering an era where money isn't just digital, it's programmable, manipulable, and increasingly opaque. Now imagine the stakes in a crisis. A cyber attack on banks, a sudden freeze of accounts, a cascading default in digital obligations. When money is digital, failure is faster. Contagion spreads in milliseconds. The old buffers of physical cash, vaults, coins, bearer instruments vanish. What remains are lines of code and promises. The question becomes who controls the lines of code, who decides which promises are honored, and who bears the risk when the system hiccups. There's one more layer most people overlook: social control. Digital money creates unprecedented surveillance potential. Every transaction can be traced, every payment recorded. Governments and corporations can incentivize or penalize behavior through money itself. Spend here, avoid there. Buy this, not that. Incentives embedded directly into the currency. Programmable money isn't a fantasy. It's a very real policy tool in pilot programs today. The implications are massive, not just for economics, but for freedom. So what's the takeaway? Digital money is powerful because it's invisible, scalable, and programmable. It's the lifeblood of modern economies, yet most people barely understand it. It shapes your life daily through inflation, credit availability, interest rates, and even government policy without ever touching your hands. And the more the world goes cashless, the more the balance of power shifts to those who control the digital rails. The irony is clear. The money you can't touch might end up controlling everything you can. Here's the thought to leave with. We think we own money, but in reality, we participate in a system of digital promises, a network of obligations, a river of numbers flowing beneath the surface. And rivers by nature can be redirected, dammed, or drained without warning. The question is not whether you can touch money, but whether you can understand it before it touches you. Because once the invisible mechanics start to move against you, no wallet, no cash, no card will matter. The real power of digital money isn't in spending it, it's in controlling it. And for now, most of us are just floating along, watching the numbers blink on a screen.
It's a quiet magic trick. Invisible, instant, powerful. Now, here's the uncomfortable part. Digital money is also digital debt. Every deposit is someone else's loan. Every transaction is a chain of obligations. When you swipe your card, you're not just spending your money, You're participating in a massive network of promises, bets, and settlements. And when things go wrong, the consequences are magnified. Think of the 2008 financial crisis. Banks had created trillions of dollars in digital money tied to mortgages. On paper, everything looked fine. Numbers were moving, profits were appearing, markets were growing. But those numbers were built on shaky foundations, debt no one could fully pay. When the first domino fell, the digital money evaporated almost overnight. Not physically, but in terms of solvency. Your account balances didn't vanish, but the system nearly collapsed. And remember, you didn't see it coming. You couldn't, because digital money hides the real risk behind a veil of zeros and ledgers. Contrast that with cryptocurrency, the new shiny version of digital money everyone talks about. Bitcoin, Ethereum, stablecoins, they promise control, transparency, freedom from banks. Sounds exciting, feels revolutionary. And yet, even here, the illusion persists. Crypto exists in code, not cash. Its value depends on trust, adoption, and liquidity. The blockchain ledger might be immutable, but your ability to convert crypto into goods, services, or even fiat money depends on networks and intermediaries. Exchanges fail, hacks happen, coins get stuck. Digital money, whether traditional or crypto, is powerful because it's untouchable. That's the feature, not the bug. It moves fast, it can cross borders instantly. But that also means it can disappear, multiply, or be manipulated without warning. Let's take a step back. Why does this matter now? Because the world is becoming cashless at an unprecedented pace. Sweden is close to becoming fully cashless. China is building its digital yuan. Even the Federal Reserve has been exploring a digital dollar. The promise? Convenience, efficiency, and better tracking of the economy. The reality? A level of control never possible with physical money. Governments could theoretically monitor every transaction, apply programmable limits, or even deactivate your account. That's not speculation, it's the core logic of digital currency. And banks? They'll continue creating digital money, layering debt and leverage, using algorithms to adjust interest, supply, and credit to manipulate markets in ways most people will never notice. The system is designed for speed and scale, not for human comprehension. Here's a simple way to visualize it. Imagine a digital river. Every dollar, every euro, every yuan flows through this river as data. You see the surface, the transactions, the payments, the balances. But beneath, there's a complex network of dams, locks, and sluices controlled by a handful of institutions. A click here, a policy change there, and the flow shifts. Assets rise or crash, credit tightens or explodes. And you're floating along, unaware of the mechanics beneath. That's the real power of digital money, the power to shape economies without ever touching a coin. Now let's talk numbers again, because numbers are where the story turns dark. Global debt is over $300 trillion, but only a fraction exists in cash. Most of it is digital promises, digital claims, digital obligations. When interest rates rise, or when credit tightens, these promises can unravel faster than you can blink. Small changes in policy ripple to trillions of dollars, affecting housing, pensions, stock markets, and jobs. And yet, the average person thinks of money in physical terms: cash in the wallet, coins in a jar. That mindset leaves most people blind to the real levers of power.
It starts somewhere you don't notice. No sirens, no flashing lights, no headlines screaming disaster. Just a line of numbers flickering on a screen. Your bank account, your digital wallet, maybe a crypto app you check once a week. They look harmless, normal, predictable. But what those numbers represent isn't yours. Not really. Not in the way most people think. This is the story of money you can't touch. Money that exists only as ones and zeros. Money that moves faster than any human could follow. Money that, quietly, holds more power over your life than cash in your pocket ever did. Because digital money